Hello guys, Joseph here again. Thank you so much for joining me on yet another edition of my weekly video. If this is the first time that you're watching this video, I'd like to welcome you and thank you so much for tuning in. If however you're part of the few people that are now used to what I do on a weekly basis with these videos, I also want to thank you for your continued support, and I'm going to try my best to keep putting out videos like this for you guys. So that's why any likes, any shares, any subscribe is greatly appreciated. So anyway, as like I promised last week, I'm going to go through all the currency pairs in my portfolio to try and show you guys both long-term and short-term trade setups that you might want to be interested in as we head into the next week of forex trading. So let's go over to the chart, and I'm going to start over with the euro dollar. Like always, I'm going to start over on the daily time frame and then work my way down to the 1 hour or 30-minute time frame. So we can see on the daily time frame right now, we do have a potential bad pattern, bearish bad pattern, that it's going to be completed hopefully very soon. So if I just bring in my Fibonacci ratio, we can see swing low to swing high. We had a 50% retracement, and now we're looking for the market to come into the 886 retracement to complete the bad pattern. So let me just bring in my triangle just to complete the bad pattern. So there, we can see we'll be looking for this market to come into this. Actually, let me try and see if we do have some sort of Fibonacci confluence. Bring in my Fibonacci extension tool, swing low to swing high, and then back down again. Yeah, I mean we do have 1618 coming in just a little bit above where that bad pattern it's going to complete. So this is going to be something to keep an eye on. Just to show you the price that the bad pattern is going to complete, it's going to be somewhere around 39.20s. Actually just a little bit lower than that. Yeah, around 38.48, 138.50s. That's where the bad pattern is going to complete. So if I drop this down back to the 4-hour chart, let's see if we have any trading opportunity that might be arising. So we can see that the market has recently broken that structure that the market was stuck in for quite a couple of weeks, that we really went nowhere with this pair, and then suddenly we broke up to the upside. So I would be looking for this market to come back and retest this previous resistance, which is now going to act as support. So whether this market is going to complete the bad pattern before coming back down into the structure, or is going to come back down into that structure before rallying up to complete the bad pattern, is something that we just have to keep watching and waiting and see what the market is going to do. So let me drop this to the 1-hour chart. There isn't really a lot going on. We do have a little bit of structure here, but I don't really expect that structure to act as anything, to be honest. So I wouldn't really be paying too much attention to this pair. So let's head over to the pound against the US dollar. That's the next currency pair on my portfolio. Starting with the daily time frame as always, just to kind of get an overall picture of what the market is doing. So we can see that the market has been bearish for quite a while, and then we had a huge a huge rally, and look where the market came into. It came into that previous structure, and then the market is retracing a little bit. But with the pound, I still think we are going to continue going higher. I think the pound is still bullish, simply because of this move that the pound is making. So I would be looking for this market to come back down into this previous structure. This is where the next trade is going to be on this pair. This is where the next trade is going to be. So if this market comes back down into this structure, we're looking for some sort of a trend continuation trade, and obviously your stop loss is going to have to be it's going to have to be a lot of pips, because it has to go down below the structure level, really, technically speaking. But we just have to wait and see what the market does. So let me head over to the next currency pair, which is the Aussie dollar. Put it on the daily time frame. There isn't really much that I can see there. Not that the market is in consolidation, just looking at the daily time frame. So let me drop this to the 4-hour chart. Yeah, it does look like we do have a cipher pattern setting up. So let me just bring in my Fibonacci retracement just to try and confirm that. So we have, yep, we do have a cipher pattern, 382 retracement, 127 extension. So we would be looking for this market to come back down into the 786 retracement, which is going to be somewhere around 69.15. So we will be looking for this market to come back down into the 786 retracement to complete this cipher. So when that's gonna happen, we don't really know, but judging by how this market is crashing down, there is a chance that we might just get a little correction and then back down into the cipher pattern completion. So this is something I'm definitely going to be keeping an eye on as we head into next week. So the next currency pair that I'm going to be keeping an eye on is the US dollar against the Canadian dollar. We might have a bearish trend continuation trade on this pair, simply because of this little structure right here. So we will be looking for this market. We'll be looking for shorting opportunities as the market comes back down into this previous structure. We can see, if we look left, we can see that there is a bit of structure right here. There is some structure here. So we do have a structure right there, a structure right there. So we were expecting a reversal really on this currency pair. We can see that the market is already bearish. So yeah, just be looking for a bearish trend continuation trade on this pair. So the next one I'm going to go over to is the US dollar against the Swiss franc. We do have a cipher pattern that completed on Friday on this pair. So let me just show you guys. Swing low, swing high. We got a 618 retracement. We got 127 extension. So we did have a cipher pattern that completed. And I think the market is still not far from where the cipher pattern completed. So let me just try and see. We're looking at a 786 retracement for the cipher pattern to complete. So X to A leg, A to B, B to C, C to D. So yeah, so the market came into that 786 retracement and we got a little rally, but the market is still somewhere around that level of structure. So it's still going to be a good opportunity to get long on the cipher pattern. So if I pop this over to the daily chart, see if we got some sort of structure right there. And we do have a little structure below, but that's where your stop loss is going to be, because your stop loss has to go below X. So we do have a little bit of structure looking left. So yeah, we'll wait and see what the market does. So the next currency pair I'm going to be looking at is the New Zealand dollar against the US dollar. Looking at this on the daily chart, consolidation, don't really see much. Drop this down to the 4-hour chart. Looks like we might have a trend continuation trade right here, even though we are still in consolidation. The market did put up like this channel, so we'll be looking for this market to come back down into this channel. The previous resistance that was broken now should act as support, and we do have a little structure there as well. So we'll be looking for trend continuation, bullish trend continuation on the New Zealand dollar. The next currency pair is the US dollar against the Japanese yen. I'm actually going to put this on the daily chart to just show you guys an overall picture of what the market has been doing. So we can see that the market has found quite a resistance at this level right here. I mean, look how many times this market has done. I mean, eventually it's going to get broken, but look how many times the market has tested this level. 1, 2, 3, 4, and now it's coming at the 5th time of asking. So if I drop this down back on the 4-hour chart, we can see that the market did had a spike down into that level after the non-farm payrolls, and then the market quickly retraced. So I'm actually currently long on this pair. So I'll be looking for this market to rally from this level, but because this level is a very, very important level. I mean, eventually it's gonna get broken, but until it does that, I'm still gonna stay long on this pair and see what happens as we head into next week. So dropping this down on the 1-hour chart, there isn't really much, to be honest with you. So let me head over to the next currency pair, the pound against the Japanese yen. This is another currency pair that I am long, simply because the market came back down into the previous structure, and this is the structure I'm looking at. We can see that the market has put in a bullish move, where the initial structure, we had a new structure high outside return, and the new structure high break and close above this previous structure. So the market now has come back down into, I would expect this market to rally from this level. So when it's going to do that, I have no idea. But look at how big, it's quite a large area. I mean, I'm currently long in this pair as well. So I would expect the market to rally from this area. But when it's going to do that, I have no idea. So let me drop this down to the 1 hour chart and try and see if I can pick up. Yeah, so this is the kind of move that I actually want to talk. Let me drop this down to the 30-minute chart. I want to talk to you guys about this kind of move. So usually when the market makes this kind of move, you know, sort of making lower lows, you know, in a sort of choppy sideways move, it usually breaks to the upside. So when that's gonna happen, I really don't know, guys. But you know, you expect this market to break to the upside. So I don't know when that's gonna happen. Like I said, I'm currently long, so I'll just have to wait and see what the market does in this coming week. So the next currency pair, the euro against the yen. I do have a cipher pattern. I'm currently long in this pair as well. On a cipher pattern that completed on Friday. I actually posted this cipher pattern on TradingView for you guys. So let me just show. The market has actually come in a little deeper than expected, but we still haven't broken the X leg. So the pattern is still valid. You can see. So the pattern completed. I actually got long at 138, 130.40s. So the market came back down, but we didn't break X. So you can see the pattern is still valid. So even though our profit target is going to be shortened due to that move, but you know, I would expect this market to continue going up as well, based on the cipher pattern. So the last currency pair, there isn't really much on this Swiss franc and the Japanese yen, so I'm not even gonna talk to you guys about it because there isn't much to look at. So yeah, I guess that's it for today, guys. Thank you so much for watching. And I hope you like this, you like what you see, and then if you do, just leave a comment, you know, share it or subscribe, anything that helps really. And until next time, I'll talk to you soon.